There is currently a $59 gap between the price of silver in Tokyo and the price on the Comex screen. In any functional market, that gap would be closed in seconds by moving metal from west to east. But the arbitrage bridge is dead. Why? Because the Western vaults are effectively empty. The spot price you're seeing at $71 is nothing more than a digital hallucination. This isn't just a market glitch. It is the definitive proof that the financial plumbing of the world has finally snapped. I've spent decades tracking the flow of precious metals, but I've never seen anything as brazen as the lie currently being displayed on your trading screens. According to the latest data from investing, the paper silver price is struggling to hold on to the $71 mark. Meanwhile, on the ground in Tokyo and the physical hubs across Asia, the reality is $130. This $59 ghost gap represents the death of the Western banking monopoly over price discovery. If the market were healthy, traders would be buying every ounce available in New York and selling it in Tokyo for an instant 80% profit. That is the fundamental law of arbitrage. But the big banks aren't doing it. They can't do it. Why? Because the physical metal is no longer in the vaults to be moved. If you look at the registered inventory levels at the CME group, you'll see the terrifying truth. The silver isn't there. It has been spoken for, pledged, and rehypothecated 10 times over. The Silver Institute has been warning for years that a structural deficit was inevitable, but they didn't account for the 2026 supply shock being this violent. The great disconnect we are witnessing this Monday is the result of the physical market finally revolting against the paper manipulation. While Western investors are being fed a diet of digital contracts and ETF receipts, industrial users in the East have started paying whatever it takes to secure physical atoms. They have realized that a paper contract doesn't conduct electricity or build a high-tech circuit board. The shockwaves from the January 1st export ban on refined silver out of China are hitting the Tokyo markets with the force of a tidal wave. Data from Kitco News suggests that the liquidity in the Western wholesale market has vanished overnight. This isn't just about a price hike, it's about availability. When Tokyo is paying $130 an ounce, they are signaling to the world that the official Western price is a fraud. They're essentially calling the Comex's bluff, and the banks have no cards left to play. I've been watching the flow of metal through the Shanghai Gold Exchange. The trend is undeniable. The East is draining the West of every physical ounce that isn't bolted down. The $59 disconnect is the price of the West's arrogance. We thought we could suppress the price of a critical industrial commodity forever using nothing but digits and debt. We were wrong. The paper-to-physical ratio has reached a breaking point, and the system is now hemorrhaging credibility in real time. For the retail investor, this is the most dangerous moment in financial history. If you are sitting on a paper position, you are holding a ticket to a vault that has already been emptied. The banks are using the $71 quote to keep you from panicking while they try to figure out how to announce a systemic default without triggering a global run. They want you focused on the screen while they scurry into the shadows to protect their own physical holdings. This is the ultimate us versus them scenario. We are staring at the total collapse of the Western price discovery mechanism. The disconnect between Tokyo and New York is the smoking gun. It proves that the Comex is no longer a marketplace. It is a crime scene. The $130 price is the truth. The $71 price is the trap. You have a very narrow window of time to realize that the market has already broken. The great disconnect is your signal that the paper lie has reached its expiration date, and the real value of silver is finally being set by those who actually hold the metal. But the paper lie is only half the story. The other half is the trap being set for every retail investor still holding a digital certificate or a silver ETF. We are now entering the most volatile 48-hour window in the history of precious metals. The Monday trigger isn't a suggestion. It is a mathematical certainty. By Wednesday morning, when the full implications of the $130 Tokyo physical price hit the settlement desks in London and New York, the window to exit the paper system will be slammed shut. If you think you are safe because you have a brokerage account showing a silver balance, you need to understand the concept of force majeure. Every major exchange, from the CME group to the LBMA, has a get-out-of-jail-free clause buried in the fine print. They can settle your physical contract in cash at their price, not the market price. With the global supply line effectively severed by the January 1st China export ban, they have the perfect legal cover to execute that clause. They will keep the physical metal for the industrial and military sectors and hand you a stack of depreciated paper dollars. The decoupling is no longer a future threat. It is our current reality. While the Western media focuses on the theater of fluctuating tickers, Zero Hedge and other independent analysts are tracking a shadow price that has completely broken away from the Comex screen. In the physical hubs of Tokyo and Dubai, silver is being traded as if the dollar is already dead. We are seeing a 378-to-1 leverage ratio on the paper markets. That means if even 1% of paper silver holders demand their physical bars, the entire system collapses instantly. The The banks know this. That is why they are letting the paper price stay suppressed at $71 while they frantically source physical metal at any cost behind the scenes. They are trying to keep the sheep calm until they have finished shearing them. According to Investing.com, the premiums on physical bullion are already hitting 40% in some jurisdictions. That is the market's way of screaming that the supply is gone. The spot price is a ghost. It is a memory of a market that no longer exists. Look at the data from the Shanghai Gold Exchange. They aren't following the Comex script anymore. China and the eastern hubs have spent the last 3 years vacuuming up every ounce of physical silver they could find. They knew this day was coming. They knew the West would eventually eat itself to fund its geopolitical ambitions. By ring-fencing 65% of the global refined silver supply through their new licensing laws, the East has effectively staged a coup on the global financial system. They will now demand payment in physical atoms, not treasury bonds, and the West simply doesn't have the atoms to pay the bill. This is the moment the silver stackers have been preparing for. For years, we were mocked as doom and gloom preppers. But as the latest Silver Institute outlook confirms, the structural deficit is now a structural chasm. We are looking at a shortfall of hundreds of millions of ounces, and the Tokyo price shock just guaranteed that this hole will never be filled. The red zone has been breached. The banks are in a state of terminal panic, and their only move left is to freeze the retail market to save themselves. You have a choice to make before the sun sets on Tuesday. You can stay in the burning building, clutching your digital receipts, or you can take your wealth out of the system and put it into your own hands. This isn't about getting rich. It's about not getting robbed. When the Comex finally halts trading, and they will, the price won't matter, because there will be no silver available at any price. The banks are betting that you will stay distracted by the headlines and the flag waving. They are betting that you will wait for the perfect time to buy. But in a supply shock of this magnitude, the only perfect time was yesterday. The second best time is right now. This is the people versus the banks. This is the great disconnect. Secure your physical position, protect your family, and get your metal out of their reach. The bridge is broken. The countdown has started. Don't be the one holding paper when the vault doors are welded shut.